So a little different than normal. First, we're gonna start with the weekly update, and then I'm going to do the 15 years ahead. First part will be free again, and then for members only, I'm going to show you about the stocks and sectors I'm the most and the least bullish on for the years ahead, and I'm also going to tell you why. So let's first, like always, start with the SPX index. So very bullish days we just had. Right now it looks like we are going to open with a big gap down, like 1.5% or so. Um, so yeah, I expect to test it lower, but because this bull trend was very, very strong, probably it will find buyers first. And then, as you know, I think that eventually the market is going to roll over. Um, we could make a higher high first. I don't know. We could go down right away. Usually, because this trend is so strong, um, yeah, we are going to find a spot where the market will find buyers. Maybe some traders went short up here, going to cover here. Some people missed the trend. They believe this market is going up forever. They're probably going to be the usually buyers here, and then when they're done, it will be the third leg. One, two, three, and then I think likely the bulls will be exhausted. Um, some bears will step in, and then eventually the bulls will give up. It could happen in May, it could happen in June, it could happen later, it could happen this month already. I don't know, but usually this is the path the market will take. And I don't know what the reason journalists will call it. Maybe there will be a helium shortage. High energy prices will impact the economy. Production capacity limits, chip production. Another war escalation. I don't know what the reason will be, but this is the path the market usually takes, and the reason attached to it will follow later. So, but let's go to yeah, I think this is it. So let's go to a higher time frame. I'm gonna take this. It has more bars on it. So yeah, I posted yesterday that well, the AI trade is probably not over yet, but we are also absolutely not in the beginning of it. This this trend has started in 2009, and yeah, basically still the same trend. Um, yeah, I'm not saying it's ending up here. We could go trend higher like this. We're gonna do the dip and then higher, and then we're gonna shoot up. But yeah, a, a trend always ends. Um, Trends never go continue forever. Um, so it's very hard to say now what's going to happen in the years ahead, how AI will develop. Will AI become AGI? Still a lot of breakthroughs need to happen. It could succeed, it could fail. Um, Nobody knows yet. So I'm not going to do any prediction on that, but I can do a prediction on the market because yeah, this is what usually happens. So let's start with the Second World War. So the market was in a sideways phase for a long time, like yeah, 10 years or longer than 10 years. It depends on how you draw the box, but let's say you draw it like this. So market is in a sideways phase for a long time. You could also draw it like this. Then you even have a longer sideways period. But then after a sideways period for 10 years or longer, the market always goes to the next phase, and after sideways, the next phase is always a trend. So after the Second World War, the market began trending, economy was thriving again, and it was trending for a very, very long time. And yeah, later, the market is going to evolve back into a trading range again. Um, yeah, that's normal. It doesn't matter. I'm not looking at the monthly chart, but you can look at a 5-minute chart, a 30-second chart, a yearly chart, a daily chart. You can look at anything. Okay, I had a problem with my mic, but I think it's working again, so I just continue. Um, yeah, so this is how markets work. So long range, long trend, long range. Could also be small range, small trend, small range, but range always converts to a trend, and a trend always converts to a range. And if we get a range like here, it's going to range for 15 years before we had another trend. So then in the 1980s, market started trending again, followed by the internet hype and eventually the bubble. And then after a very long trend, market is going sideways for another 10, 15 years. Exactly the same as here. Um, yeah, like I said, it doesn't matter if you can look at a 5-minute chart and just count the bars, and well, then this just takes a few days. But after a long trend, we are going, after a multi-day trend, we are going to range for multi-days too. So it doesn't matter if you look at a monthly chart or a 5-minute chart, it's just how markets work. So then in early this century, we had a range for 15 years. Maybe you can say if you were a trend trader, the trend started here. So this was the range, and then in the bottom of the range, it always started. It already started. Well, that's absolutely fine. But what I'm saying, after a very long trend, again, you get a very long range. So now we are in that very long trend again. Um, so the next phase will be a very long range, and that will probably will come together with AI having its issues. I don't know whatever reason it will be. The AI bubble fears. Companies made huge investments, but the return are not what they thought about it. Or just like the late 90s, there were just so many internet companies and only a few survive. We already see it with software right now. SaaS companies have been completely collapsing because Anthropic um, is going to make, well, not all of them useless, but some of them, and not completely useless, but it's going to completely change the landscape. Um, yeah, I think here it all depends on if AI becomes AGI, artificial general intelligence, can it reach human level of intelligence, or will it just stay like what we have now? Like it's very good in coding, it's very good in writing, it can do some Excel calculations, um, but the next step still needs to be achieved. And I know there is progress, and I know there is humanoid robots already, but there still needs to be some major breakthroughs um, before we reach the next phase. So whatever the outcome with AI is, I think it is safe to assume that we have entered the last phase. Nobody knows if we are, for example, here that we're gonna have another leg up for another 1, 2 years we before the market really starts to roll over, or we're already there yet. Um, I don't know yet, but as an investor, you must know. Um, yeah, you must know that we are in the last phase, and the last phase could take another few years. We could even um, crash here and then crash here like this, and then make a major new high when we have AGI breakthroughs and productivity is going sky high, and we are not losing all our jobs because the government makes so much money on the productivity generated by AGI that well we're going to lose our jobs, but we can maintain our welfare system. If everything goes well, of course, we can have another climax like what we saw here in the 90s. It is actually easier seen on the Nasdaq um, because yeah, it could happen that the last phase is going to be like this. It could happen here too if everything goes right, but still it will be the last phase and market will be going down. Um, I don't know how deep we will go down. In the 90s, we went like from 5,000 to 800. It's like 80%. I don't know if we're going to do that again. I'm not going to bet on something that deep, but 50% would be very normal. So again, no, I'm not going to repeat myself. Um, we are in the last phase. I think that's safe to assume. How long it will last? Will it end this year? Will it end in a few years? I don't know. But you have to be aware of it if you are an investor. So what my advice would be, well, I would not get all in the market right now, and then just hope it's gonna last for a few years before you see it all coming down again. I think the risk reward is just not favorable to take a new position here. I think you should go to individual sectors that I'm going to continue with in a few minutes, or you should wait for a major dip to get in, to get your money in. But with major, I mean much more than we have seen now. Or or you should go trading. I mean, if you learn to trade long and short, then you can take all the swings. You can long up here, short up here, long up here again, short up here. Okay, right now this trade didn't go as far as I expected, so I covered with minor profits, and I'm looking for new shorts in this zone. And then if we find the bottom, I'm going to long again. I'm going to try to trade all of them. It's not easy. It will take you a few years to learn it, but it will be worth it because the next 15 years, like I said, it will not be a very long trend like we have seen. The last 15 years, it's just very unlikely. This market is getting old, and I showed you the last 100 years what usually happens. So much more likely we're gonna go for 10 years, maybe 15 like this, and then yeah, eventually the market is gonna go higher again because of inflation, money printing, um, yeah, money printing by itself, inflation by itself will push the stock market higher over time. Um, so after a 15 year 10 after a 10-year sideways phase like this with 50% crashes, 100% up, another 50% crash, um, up, down again, then I would go all in as an investor. Just put all your money in. Don't look at it for another 15 years and then get your profits in. The risk reward will be so much better. The probability will be so much higher than it is when you start right now. Okay, so we're going to continue now to the individual sectors. Going to continue now for members only, and going to continue with all the sector. We're going through all the sectors, and there are some sectors where I think you can still put your money in for the years ahead, and some stocks too, if you are a long-only investor. And yeah, I'm going to show you that right now. So let's start with small caps.